On Monday, we started the trading session with the U.S. equity averages in the red, but as we eat closer to the closing bell, we're seeing the averages gain. So joining me now is Peter Cardillo of First Standard Financial. Peter, great to have you here today.
Good to be back.
Well, we're seeing small gains for the equity averages today, but overall, we got the G20 communique, and of course, we're watching out for this week's Fed Reserve comments. But given where equity valuations are right now, what are you paying attention to?
Well, look, the G20 was a failure. There's no question about that. They didn't come out with any common ground on trade barriers, and so that just simply means that the Trump effect actually won. And so what we're seeing today is a market probably that's not really fully reflecting the possible negative consequences that the G20 has set itself up for. And so I think what we're seeing is, post-Fed rate hike and macro news of last week basically guiding the market.
And as we edge closer to the end of this week, we'll start paying attention to the end of this quarter as well as the beginning of next quarter. But before that, we will be getting the triggering of Brexit on March 29th. We saw interesting trading action in the FX markets in terms of the British pound today. But how do you see that affecting the global markets?
Well, I think to begin with, it'll probably be a plus for the greenback. And so the greenback probably can snap out of this malaise that it's gotten itself into. And I think, obviously, part of the reason for that was that a lot of foreign exchange traders were anticipating, like I myself was anticipating, a more hawkish Fed. And we didn't get that. The Fed stuck to its plan of raising rates 3 times, already enacted once, 2 more to go. So that sort of, deflated enthusiasm for the U.S. dollar. But I think that with the prospects of protectionism probably becoming more of a reality than a fantasy, and the British exit beginning to go into full motion, then I think that, we could probably see in the short term the dollar regain strength.
And what about other event risks? We do have the presidential debates in France ahead of the election, so we'll be paying attention to that. But in terms of major event risk in the bigger picture, what will you be watching for?
Well, look, the basic needs of the market is earnings, the upcoming earnings season. We are approaching the end of the quarter. And then, of course, the macro news. Those are the 2 key factors in terms of keeping the market from basically reversing its course. Now, what we're seeing here is a market that's just marking time, which is not necessarily a negative. And could actually be a positive because if we continue to see good economic numbers and if we continue to see first quarter earnings come out maybe comparable or better than we are expecting, then I think it could probably mean higher stock prices ahead.
Well, I'm sure you'll be paying attention to the Fed speeches coming out this week, as well as the markets. So thank you so much for joining me today, and I'll see you next Monday.
My pleasure.